All right, good evening, guys. It is RTBro here, and I'm going to give you guys a crash course on how to trade a bear market. So the reason why I'm bringing this up is because there is a very legitimate chance that we may be going into a prolonged bear market. And I love bear markets. That's what I was raising, guys. Like I started trading back in 2018. So my entire experience has been in bear markets. I also quadrupled the amount of BTC that I owned simply by using the strategy I'm about to teach you in this video. Okay, it's very simple, and I promise you guys it freaking works. Okay, this is the attitude you must have. You must think like you have to be the most cynical person out there. You don't trust anything that the alts do. Every single time that it bounces, it's going to go back down. Have that mentality and you will be successful during a bear market. You must let the coin prove itself to you. And until it does, you do not believe anything that's going on, okay? If you have that mentality, I promise you, you will be successful in what I'm about to teach you. So the rules are very simple. You buy at support, you buy at a show of strength, you sell at resistance, and you sell whenever there is a show of weakness. Those are the rules of trading at all anyways, right? So let's look at what we did. So Litecoin, good example. You have this monthly breaker. On this monthly breaker, you came back up. It got retested. This shows you that this is a legitimate monthly breaker. Went back over, came back down, and now retested it. So this is a very clean retest of this monthly breaker. However, like I told you guys, are we going to trust this? No. Why? There's too much weakness in the market. We do not have enough confirmation that the bull market will continue. So because of that, we're going to play safe and worry about capital preservation above all. So how do you do this? So the first thing you're going to do is you're going to go to the daily chart. And on the daily chart, you're looking for one thing, this blue line. This is the 200 moving average. This will provide a very solid resistance, okay? It will provide a very solid resistance. Another one you're going to put up, let me add it real quick, is going to be moving average as well, except this one, oh, it's right there actually. I'm going to adjust it real quick. And instead of being the 21, I'm going to put it the same as here, so the 147. So the 21 weekly moving average is the same as the 147 on the daily. So I've added the 147, and that is another strong resistance. So these two blue lines are going to be, let me change the color real quick. Style, I'm going to make it green. Yeah, let's do that. Okay, perfect. So the 200 is now green, and the 147 is now blue. So at this green line, this is a very strong level. At the 147, it is also a strong level. So what do you think you're going to do when you get to these levels? Right, you're going to sell because that is a very solid resistance. Are you going to sell it all? No, absolutely not, right? You're going to take off a little piece right there. Then when you get up here, you're going to take a little piece off there. Okay, I'm going to get rid of this real quick. I'm going to go over that one bit at a time. Okay, so a little bit of piece right there, a little bit of piece right there. Now, I'm talking like maybe 10% here, maybe 10% there. Okay, that's it, guys. Okay, don't ever go all in on a single position. So you buy at these very high time frame support levels, which I hope you've already done so. If you haven't already done so, you want to be careful because since we're in a bear market, you really don't want to be buying until it shows some serious strength. So you're going to sell a little bit here, sell a little bit here. Now, the next thing you're going to do is you're going to go was to the Fibonacci Retracement tool. Okay, Fibonacci Retracement. Oops, I messed it up real quick. You're going to go from the very top of the impulse down. Okay, the very top of the impulse down. Now, and we are going to go to the very bottom. Okay, very bottom. Very top of the impulse, all the way down to the very bottom. This is one massive impulse downward. Okay, you guys can see this. We are going to do a Fibonacci retracement of the entire structure. Okay, the entire structure. And what we're going to be looking at mainly is the 382 and the 618. These are prime targets for a retracement. These are absolute prime targets, 382 and 618. However, I also like to add position at the 236, the 0.5. If it gets to the 786, I do not sell here. Okay, that is a major sign of strength. Once it gets above the 618, once it gets above here, I think it's a major show of strength, and I do not sell at this level. Okay, so I will sell probably about maybe 10%. I would probably sell about 5% here at the 236. I'd sell about 10% at the 382. Probably another 5% at the 0.5, and then I'm going to sell another 10% here at the 618. I'm going to sell 0 at the 7.86, or I'm sorry, 0.786. I can't talk tonight. All right, that's what we're going to be doing. So 5% here, 10% here, 5% here, 10% here, and 5% here. Okay, so that gives you 0 here. My bad, 0 there. Now, obviously, if you come back up to the 1-to-1 ratio, you actually might want to consider taking off some here because that could be a double top. However, you have to look at the entire market conditions. If it gets up to this level, you very well may just absolutely surpass it. But the point here is that we are going to treat this as if it will not continue to a bear market or a bull market. All right. Now, I'm going to go ahead and minimize that for now or get rid of it. So we have all those levels marked off. Now what we're going to do is we're going to look at some high time frame resistance levels and see if there's any major breakers that have been established on here. So we're going to go to monthly. There's no major breakers. This can be considered, but it's such a large and wide spot, I don't think it's worth the time. Let's go to the weekly. Are there any weekly breakers here? Yes, but I think it grinded up. I'm not really too concerned. There is this one right here, but I'm pretty sure I can get a better look at whenever I zoom in. Let's look at it on the daily. You know what? I'm still going to go ahead and keep that up. No, I'm not. No, I'm not. I think I'm going to let it die because we melted right through there. I'm not too concerned on that level. So instead of what we're doing, I have this level right here, which coincides with the 147. And then I also have this level right here, which is probably pretty close to the 618. Let me check real quick. Yeah, right about 618, a little bit higher than that, but it's pretty damn close. So at these two breakers, what am I going to do? What do you guys think? I'm going to sell a little bit here. I'm going to sell a little bit here. Okay. So sell 10% there, about 10% there. I think that's probably pretty reasonable. So let's see. We've sold, I'm going to keep track real quick. We've sold 10% at the 200, 10% at the 147. We're going to sell 10% at the 382. 5% and 5% at the 0.5 as well as the 236. Okay, I'm going to sell 10% at the 618. I'm going to sell 10% at the 386, and then I'm going to sell 10% at this breaker, and then 10% the last breaker. And that leaves me 20% just in case this thing does become a moonback. All right. So I'm getting rid of about 80% on the movement up, and I'll have 20% as a long-term hold. That is how you sell, how you trade these markets. Now, whenever I'm saying going to sell at this level, you don't want to just put all of it in this one spot. You want to put ladders all up and down this sucker that's going to equal out to be a 10% of your total portfolio or whatever you plan on dumping off, okay? And that's how you play this. Now, if it comes back down, and let's say it does something like this. Let me find it real quick. Let's say, hypothetically, I can't find it. However, let's say it does something like this, okay? Oh, here it is. Let's say we go from here. It goes above this level, taps this level, and is now coming back down in here. Okay, let's say it does something like that. Okay, I've dumped off. It came through here. I sold 10% there, 10% there. I sold 10% here. I also sold my little 10% all up and down here for the 382, as well as the 236, as well as the 382. Right. When I come back down here into this major breaker level, as well as the 21 or the one, oh, the 200. This is 200. When I come back in the 200, what am I going to do? I'm going to rebuy some of my position here. Why? Because you assume that since we have went above it, this will now become a support again, right? Does that make sense? Are you going to buy a lot here? Absolutely not. No, 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 right? No, you're not going to buy a lot. However, if you want to throw an extra 10% back into the market at this level because you have reclaimed it or you're going for a reclaim, that's a very reasonable thing to do, okay? Because this now becomes a support since you went above it and now came back into it, okay? So let's make sure we're on the same page real quick, okay? So you want to take a Fibonacci retracement of the entire region, and each one of those levels each has a certain significance. You need to pick your own. So for me, like I was saying, I have the 382 and the 618 as my most primary. Those are my most important. So I sell 10% on each one of those levels. The 236 and the 0.5 as well. Yeah, the 236 and the 0.5, those ones I get rid of about 5%. Then over here on the 200 is a very important level, so I go ahead and dump off about 10% there. And on the 147, I also dump off about 10% because it's also a very important level, right? Then on any of the breakers, I will basically distribute the rest of it between the breakers that I think make the most amount of sense. And these two right here on Litecoin seem like they have the most significance in this market. So now, if it does only come back up here and it continues back down, great. I've still made a profit from this level up here into this level, and I have some moon bags that I can hold on to later, or I can also try to get rid of it as it starts losing these levels again. Okay. The key here is that you do not trust the market. Okay. You need to come in this market with the assumption that it's going to fail. And if you have that philosophy, if you have that mindset, you will be very successful in a bull market. And even if your US dollar value does not go up very much, your Satoshi value, the amount of total Bitcoin equivalency that you own, will go up substantially. You must be disciplined in this method, and I promise you it will work and you will have tremendous success. Obviously, not financial advice. This is for educational purposes. This is something that I do and I will absolutely be doing until we once again prove that we are in a bull market, which as of right now, we have not. So that's all I'm going to go over tonight. If you guys have any questions, like always, let me know. Like, subscribe, and all that good stuff. Comment below what you guys think of this system, if I missed anything, etc. What you guys have done and use in your own trading styles. So outside of that, I'll let you guys go. Have a good night, and I will see you in the next video. Bye.